and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, the markets have recovered so sharply and we are back above 22,500 in trade today. Remember, we had an overnight, turmoil as far as the US markets are concerned. The FIIs were on a selling spree. Asian markets this morning were nervous and we also opened much lower in trade. The pre-open trades were hinting at a start at 20 to 100. We had started to recover just from that point, and if you look at the Nifty today, despite all the choppiness, we've actually garnered a lot of strength and we are now at the day's high point with 22,505 back on the screens thus far. So strong recovery, and that's led by a lot of sectors that are supporting this move. Real estate sector is up by over 3% in fact nearly 4% up, 3.8% higher for the zoom that we are seeing on the real estate pack. I mean, that's the one that's pulling up the sentiments higher. Oil and gas space 1.2% up. You also have the broader markets which were sharply lower in the trade in the morning session. Midcaps have recovered, and how? The midcap index is now up by 0.6% in trade. Financial services, consumer durables, pharma, metal index and the PSU banks are the other pockets that are also doing very well at this point in time. However, it's the private banks that are still falling behind, over a percent cut for the private banks, so they are not participating in the recovery. So also are the small caps. They continue to reel under pressure. IT, auto, FMCG and the Nifty Bank overall still stays in the red at this point. But strong names on the Nifty that are pulling up. Trent is about 5% higher in trade, over 5,000 odd levels back on Trent. You have BPCL that's been holding up, 3% up for this one. Sun Pharma, ICICI Bank and Hero MotoCorp, these are the pockets that are actually doing very well as far as the Nifty stocks are concerned. On the lower end, however, you continue to see IndusInd Bank reeling under pressure, now down by over 26.8% at 658 after that big blunder that's happened, discrepancies as far as the derivatives trading is concerned, and the bank has mentioned that they are going to be facing a net worth cut of anywhere ranging between 1,600 crores to 2,000 odd crore rupees, and this loss they will be absorbing in the current and the next quarter. Infosys is down by 2.2%. M&M, Bajaj Finserv, Power Grid and HUL are the other stocks that are down by over a percent as the top drags on the Nifty right now. PSUs have recovered smartly as well, 0.9% of an uptick on the Nifty PSE index. The stocks that are doing well, of course, are the OMCs, BPCL, IOC and even ONGC for that matter, Oil India. Both the upstream as well as downstream companies are together supporting the sentiments on the oil and gas space. You also have REC that's up by 2%, PFC up by 1.3%. So erstwhile favorites also coming back. Let's look at even the F&O names. You have Tata Communications that shot up smartly, 8.5% higher. Paytm, Phoenix Mills are some of the counters within the pack in the F&O that are continuing to do very well in trade. Let's welcome our guest on board. Kush Kodasara now joins in, market expert on the platform. Hi Kush, warm welcome to you and good afternoon. First up, tell us, when we were opening this morning, there was fear that the kind of sell-off that we had seen in the US could get replicated across the world, including in India. We did have that knee-jerk opening, but the markets were soon to recover, and right now we are seeing 22,500 back on the street. What does this really indicate, and what has caused this recovery to take place?
Good afternoon and thank you for having me on the show. Definitely, there is a recovery because, lower valued stocks, stocks which are getting at good valuation, stock names like FMCG, somewhat in real estate. We have seen some buying because, it's a financial year and people with some liquidity are definitely chipping in some money for long-term investment, because we have seen almost 20% correction from the higher levels in many stocks. So definitely value buying is what we are witnessing, but follow-up buying is what is necessary. I mean, last weekend also, Thursday, Friday, we saw a good recovery, but again, we are seeing some sell-off. So unless and until, FIRs are buying in our cash segment, I don't think we are going to see some major rally. So this rally could be just, pull back. 22,750 is my resistance, where I have kept a stop loss for my shorts. Still, I would recommend to hold a short for a day.
Okay, fair point. Well, interesting points there, Kush. Let's actually try and understand from here. Can this recovery continue? We are in a truncated week this time around. We just have about 2 more sessions to go. Will this momentum be able to sustain above 22,500, or is it still going to be dicey?
I think it's still going to be dicey because financial sector, which can be termed as the hard line of the economy, is in some pressure. I mean, if you look at private sector banks like Axis Bank, of course, IndusInd has some corporate news, but if you look at Axis Bank, it's in pressure since morning. HDFC Bank is not able to sustain above 1700 since last many sessions. So I believe it's not just we need some teamwork. Like we had some teamwork, over the weekend with Indian team. All the players perform. But in banking stocks, since last 1 month we have been noticing that all the stocks are not performing, on a single day. So one day we see PSU banks performing, other day we see NBFCs performing, other day private sector bank, but they are not performing all together. So I believe still financial sector is in some pressure. So this could be just a knee-jerk reaction. Only confirmation we can see is about 48,400 on Nifty Bank.
Fair point. Let's actually look at about a few pockets and then try and understand how are these, pockets looking like to you at this point in time. You started off talking about real estate, 3.8% higher. It's come back after a long haul. In the last few weeks, we were seeing real estate under pressure. This had been an outperforming space across last 2-3 years consecutively. Real estate has really outperformed the benchmark by a wide margin. Many stocks have actually turned wealth creators within this pocket as well after a long haul. But in the recent consolidation, real estate was also giving up a lot of its recent gains. What do you make of this smart recovery today? And do you think the triggers that have helped it rally can continue to support the momentum even going forward here?
No, I don't think so. We will see some good rally from current levels. There are two reasons. First, all the stocks, of Nifty Reality Index, like Godrej, DLF, they all are resisting near previous week's high. So maybe we need some, follow-up buying tomorrow. If we witness some follow-up buying, maybe short covering for 1 or 2 sessions. Otherwise, generally this quarter we see low activity of investment and also construction because Holi is a period where most of the
Yes.
labor go back to their hometown. So I have surveyed this thing last 2 days in Ahmedabad region. Construction activity is at the almost shut down for next 15 days. There, March ending, so there are no more sales and people are busy adjusting their financial years. So I don't think so this rally is something to do with fundamental. These are purely technical because we have a oversold. So yes, definitely a short covering is happening on Nifty Realty Index. Only high risk players can take some risk for BTST on DLF if we sustain about 675. Otherwise, this is an opportunity for short term traders to exit on higher level.
Yes. Okay, got that. Let's take some other pockets also into consideration. The other pocket is oil and gas that I wanted to take with you, Kush. Looking at how crude oil prices are, continuously falling, is this space really looking attractive from a trading perspective? Should one continue to focus on this space?
No, I don't recommend to trade on this OMCs. Rather, I would, recommend insist on investing for long term at current levels in IOC or BPCL because they give a good, dividend. So if you are looking for something 5 to 7 years of horizon for investment, IOC is the best stock because at current levels, if you look at 8 to 9 rupees dividend, you may get better return than your fixed deposit. So don't trade on these stocks because I don't believe crude oil prices. We don't buy crude oil prices every day internationally. We always hedge it. So if I'm not wrong, India has a deal with Russia at $65 a barrel for almost 8 to 9 months. So I don't think that fluctuation can help balance sheets overnight for OMCs. But definitely, if you're a long-term investor, you would miss the bus. IOC and BPCL are my two picks, which I have started recommending to my long-term investor to chip in some money before March.
Okay. I also wanted to bring up the top mover today on the Nifty, that's Trent. I mean, 5,000 was back on the screen as far as Trent is concerned. Again, this was a space that was giving up a lot of its erstwhile gains, coming off sharply from those all-time highs that we have seen on Trent. Trent has been the best performing Nifty stock, the only stock to have doubled investors' money in 2024. However, in the first quarter of the calendar year 2025, the stock really came off a lot. Finally, we are seeing some spring back into its feet, 5,000 back into the pause as well, 3.8% higher right now. What do you foresee for Trent?
No, still we will see a good correction. Maybe I think, we had seen a good rally in last 4 years on trend, but now if you look at the retail space, we are getting numbers that now we have a subdued growth in retail space. And of course, currently there is no wedding season, nor a Diwali. Generally, that is the period where we see highest sales. So this quarter is again, quarter where we see school exams and stuff. So buying in retail space, I don't think so. We'll see some tremendous growth on sales number. Trend is a good stock for long-term investment, definitely, but this one-day rally cannot be trusted. I think 4,200 is on the card where it would be the best level to enter for long-term.
Okay, fair point. So that's as far as Trent is concerned. But let's look at F&O as well. There's some interesting action there. Tata Communications up 8.8%, top mover in the F&O space, followed by Paytm that's up 7%. How are you looking at some of these interesting stocks that are up on volumes and sharply higher in the F&O space?
Maybe time to exit. I mean, why Paytm is up 8%, I don't know. I mean, now they are not left with any good businesses. They are selling off many good businesses. Wallet business, they are not allowed. Fastegs, they are not allowed. So I think, Paytm has never been my favorite stock, even for trading. It could be a trap. So avoid Paytm. Yes, definitely Tata Communication is looking good. So one can, hold on to the existing position. We are already up so much in a day. So fresh positions, risk reward ratio is not favorable, but
Yeah.
1475 can be your trailing stop loss. On the upside, 1520 can be your target for short term.
Okay, fair point. Let's look at some of the other interesting names then, what we can spot. Okay, from the pharma pack, let's discuss some names. Sun Pharma, that's, smartly moving up in trade today, 2.7% higher. The pharma index is itself up by 0.3%. Does this space offer you any interesting value picks?
Definitely, there is some interesting value picks, but looking at, I don't know what Trump would say overnight. So it's very
Yes.
difficult. Already he has indicated that we may have tariffs on pharma. So, trading position is not recommended. Rather, I have suggested clients to, start, hike your SIP in thematic pharma fund. So if you are a long-term investor, don't go for direct equity currently because it's uncertain. But definitely you can start chipping in some money in pharma funds.
Okay, fair point. So that's as far as the pharma outlook is concerned. Let's also pull up some of the other pockets. Okay, interestingly, metals. Do you think metals also is something that you would like to look at? There was a smart recovery in the last few weeks as far as the metal story is concerned. With China recovering, stimulus being announced now, there is a hope that Chinese economy will be back on track, and metal stocks, because of its huge demand in China, do you think they will continue to bet big on that story?
Definitely, generally in a technical, there is a economic cycle where, when there is a last leg of correction in equity markets, commodity stocks perform. So that is one of the signs. So if you look at, last 2 or 3 weeks of charts of Hindalco, Tata Steel or JSW Steel, they have been performing well. So this is a perfect sign. So, you can hedge your short positions on financials by going long on Hindalco or something like JSW Steel. I think they will perform well in short term, outperform markets. Outperformance, I mean, not, it might not move, but it won't fall also. So definitely you can hedge your shorts with going long on Hindalco or JSW. My target on JSW is around 1060 in near term.
Okay, so that's as far as the metal story is concerned. Let's also pull up some stocks in the broadest index to see where there are some interesting developments. Today, Anant Raj is up by 6% nearly. You have Kiri Industries that's up 6.3%. You have Tube Investments, Graphite that's moving up. We have already discussed Paytm. Then there is Chennai Petro that Kush just mentioned, so he's looking at it as well. Vadilal Industries is up in trade. You also have names like Kolte Patil Developers from the real estate story, Trans India Real Estate, that's also up and about. Thangamile Jewelry is up by about 12% today. Indegene, that's another one that's also on the move. Of course, Tata Communications we have discussed. So these are some of the names in the absolute broadest index Nifty 500 names that are coming in. Anything that catches your attention in the Nifty 500 basket that you'd like to bet big on even for tomorrow?
Definitely, overall index is looking good, but Shakshi, just one day of rally, I'm not trusting it because it could be a good
Yeah.
honey trap for traders. So let's wait for another day.
Let's wait for another day. And no stock has hit a 52-week high today. Remember, viewers, even if the recovery is happening, there is no stock that we can mark on the Nifty 500 basket, which is on a 52-week high load. But on the lower end, of course, we have IndusInd Bank just further slipping away, 27% lower. You have Apar Industries, Birla Soft, Raymond, IDFC First Bank, PNG, all of them down at 52-week low levels at this point in time. But the most active by value include names apart from IndusInd, which is understandable. BSE 5% lower in trade, and Zomato also about 1.5% lower in trade. Let's discuss these two pockets. First, let's discuss BSE. 5% lower. There has been a constant pressure on BSE. Kush, from the time NSE really talked about shifting their trading, sessions, the expiry trading sessions on Monday now, that will start to get effective from April now. There has been a constant pressure on BSE. Looking at how it is a poster boy of the capital markets related story as of now, till the time NSE shares also get listed, what's your suggestion here? How should one approach this stock?
Definitely, this stock is a good long-term bet. I mean, if you look at the prospect, definitely this stock is looking attractive. But two fundamental reasons believe we are seeing correction is because of definitely of the expiry. Secondly, if you look at NSE NSE stock is traded in unlisted zone, and if you look at unlisted PE ratio, NSE itself is trading at 40 PE, while BSE was around at 70 PE before this fall. I think that divergence is also being taken by many investors because we have rumors that NSE will come out with IPO this year. So, I mean, profit booking is going on at BSE, but if you're a long-term investor, you shouldn't be afraid. We'll, average it out around 3,300. So wait for a right level to average out. But yes, don't go long on future contracts for short term. But the right time will come down for long-term investment.
Okay, so I hope this has also given you some understanding as to how should you be looking at some of the pockets. Some improvement can be seen across the board. You have consumer durables that are improving in trade. The winners include names like jewelry stocks are up and about. Are you looking at the gems in the jewelry space or even the gold financiers, Manappuram, Muthoot at all at this point in time, looking at the uncertainty in the market? And even though gold prices are slightly, marginally coming off of the last few days, do you think it's still continuing to be an attractive zone?
Definitely no. I don't think yes, gold prices are coming down at attractive pricing, but there are two reasons that we won't see any hike in sales. One, wedding season is over. Secondly, all the investors are losing money in stock market. So I don't think so they will allow their partners to buy any extra jewelry right now because all the money has been going down in equity market. So when there is extra saving, when there is economy rolling out with more money, we see even at last year when prices were rising, we had seen sales going up, but
Hmm.
I don't think so sales are going up in next quarter. So Titan is on my radar. I think at a lower level around 2,800 I would go long on Titan, but not at current levels.
Not at the current levels, okay, fair point. So that's the view that we have as far as this space is also concerned. Looking at some of the other interesting names, in fact, yes, we wanted to discuss about Zomato that we forgot. Zomato, particularly, how is your approach like at this point in time? The stock has been continuously falling for the last 5 odd trading sessions. There has been some recovery from the day's lowest point. I think we also tested 200, briefly, but we've come off. What is your own suggestion on Zomato? Is this a good time to accumulate those who have at higher levels?
Definitely, as a disclosure, Zomato is I have already initiated for my clients long time
Hmm,
back.
hmm,
This is not the right time to average out. I think
hmm.
today we have a good recovery, but the level it has breached 200 level that was breached after almost May 2024. So I think best level to enter Zomato is around 165, 170, where it picked up from post 4th June. So just wait for some time for averaging out.
Wait for some more time for averaging this one at this point in time. Okay, let's look at the kind of move that we are seeing in the markets right now on the Nifty Next 50. Macro tech, of course, is the top mover. DLF follows next. You also have IOC, REC, Chola Investment, Info Edge, along with Zomato that's moving up. You can see several others also that are moving up in trade. But let's actually discuss the lower end of the pockets too. What's wrong with the IT names at this point in time, and how are you approaching this space, Kush?
Definitely, no. IT stocks are seeing effects of Nasdaq falling. Secondly, our rupee is strengthening, so that is an also a marginal loss for IT. So I think IT stocks are overvalued, and we had seen a good rally. They were in overbought position, something like 4-4. If you look at the momentum, we had seen a great rally. So I think technically plus fundamentally, we may see some setback. Still, IT index has reached all support level. uh, Not right time to invest, but I am looking for some consolidation time. So if you're already short IT stocks, you can hold on, but fresh shorts are not recommended.
Okay, fair point. So that's as far as the IT pack is also concerned. Let's pull up some of the other stocks that are also buzzing in trade today. Within the mid caps, let's spot some opportunities. We haven't discussed that one with Kush yet. Mid caps today showing some strength. Bharti Hexacom is an interesting one that's moved up to the top spot when it comes to the mid cap stock performers. 10% higher in trade for this one. Of course, Tata Communications we have discussed. 197 Communications at 7% higher. We've discussed Phoenix Mills, the real estate story that's playing out, Tube Investments, Max Financial, Godrej Properties. Again, a lot of real estate names. PB Fintechs up by 3% as well. That's also moving. Kush, what about the mid cap names? Anything that comes to your mind when it comes to mid cap opportunities?
Definitely, no. Midcap has recovered tremendously from the lower levels. Bharti Hexacon is looking good, but it has a low volume. So maybe as a trading point of view, you may get trapped sideways. But yes, Info Edge is on my radar. It has been falling from the levels of around 8,900. So if at all we see 67.25 tomorrow, we may definitely buy. So keep Info Edge on your radar. It is recommended to buy the stock above 67.25.
Okay, fair point. So that's as far as Infosys is concerned. Let's discuss it 323. Any BTST, STBT trades, Kush, that you'd like to mark for our viewers today?
Definitely one STBT, it's a high beta, so only for risk traders. You can short Tata Motors.
Okay.
654 is your stop loss, so 1% stop loss. On the downside, I believe we may test 630 tomorrow.
Oh, okay. So 6:30 could be coming in soon on Tata Motors. That's what is expected. There could be further downticks. It's tested 650 and now 6:30 could be on its way as far as Tata Motors is concerned. Viewers, keep an eye out on that one. An STBT candidate. Let's also look at some of the other pockets. How are you looking at tourism basket at this point in time, Kush? Some of the hotel stocks are again looking at the upcoming summer travels, and this is the time when most of the bookings happen for hotels, even for flights or trains at this point in time as well. Anything that comes to your mind as to what should one bet big on summer vacations?
Definitely, I was positive on this summer vacations, but last evening I was on a call with my agent, and it is interesting that still, we have not seen even 50% bookings what were done last year. So there are, summer vacation bookings are not as good as last year. So maybe we may see some slump because agents have blocked many airline tickets and hotel bookings, but we are not seeing that much attraction from interest from at least for the local tourism. So as of now, just wait and watch. Lemon tree is on the radar, but yes, definitely still not a good time to buy.
Still not a good time to buy. Okay, we'll keep that in mind as well. Okay, since we're talking about the entire space, let's also discuss PSUs, especially defense and railways. Kush, how are you approaching these two pockets right now?
No, avoiding both the pockets, but from PSUs, if you want to, start investing, of course, IOC was one of the picks. Second
Yeah.
one is Coal India. I think Coal India has formed a good base. We may not see some more downside, but yes, definitely Coal India can also be bought at current levels around because we are, approaching summer season and electricity demand will go high. So with the stop loss of 368, Coal India is a good hedge buy. On the upside, we may see 400 in next 2 months.
Okay, got that. So that's as far as the view is concerned. We'll keep that in mind as well. Right now, viewers, there's a 3.7% uptick on Realty, so that's definitely the top mover today. Oil and gas is close second, 1.2% higher. Infra about 0.8%, Midcaps 0.7%. Financial services about half odd percent. You have metals, consumer durables, pharma, and PSU banks as those pockets that are moving up in trade towards the latter half. 43 points higher. We are comfortable as far as the Nifty is concerned, and we may be looking to shut shop above 22,500. That should spell some more confidence in the investors with the kind of recovery that we've seen today, despite all negatives all across that we were surrounded with. Okay, within the top 5 Nifty names again, I'll bring up for you the banks and the private banks and the financial services spaces. ICICI Bank is the top mover, 2.5% higher. Can one carry on the trade here?
Definitely, ICICI Bank has held up the market, but exactly it is resisting at 200 average, which is 12,1245. So maybe not today, but tomorrow, if you open about 1245, definitely a good intraday trade we may get tomorrow.
Okay, fair point. So that's as far as the move on ICICI is concerned. But the pain continues to be there on IndusInd Bank, now 27% lower at 657 odd levels. It was a rude shock that has come into investors today with the way IndusInd Bank has reacted today, crashing 27% towards the day's end, with discrepancies of about 1600 crore rupees impacting the net worth of the company to the tune of 2.35 odd percent is what the company has said, and this loss will have to be borne by the company for this quarter as well as the next quarter too. So that's something that we are seeing a sharp reaction to on the downward edge as far as IndusInd is concerned. You've clearly marked, Kush, that it's like a catching a falling knife. So one should be very, very cautious at this point in time. If one is looking at this 27% dip and thinking to themselves that this could be an opportunity to average out their shares, well, it could be catching a falling knife, because you don't know how soon and how much deep the cut has been already done as far as the discrepancies are concerned, which IndusInd Bank themselves have come out in the open and talked about too. Kush, any strategy for tomorrow?
Definitely, tomorrow we should keep in mind the opening price. If at all we open about 22,540, one can go long on intraday trade. But if we open below 22,460, then we should short intraday. So Nifty, keep in mind these two levels, 22,460, and on the upside 22,540.
Fair point. Kush, thank you so much for being with us on the show today and helping us navigate through various opportunities. It's a half century for the Nifty, 22,512, and we're definitely hoping to shut shop above 22,500. At the high point of the day, smart recovery has really taken place as far as the market moves are concerned. The Indian stock markets have shrugged the US worries at this point in time and the global cues that we had seen right in the morning. Even though the Nifty Bank was a non-participant, despite that the Nifty is managing to see a 0.25% jump in trade today. A 0.7% of a cut on the Nifty Bank, largely drawn behind by the private sector banks. That's the top losing sectoral index, 1.3% lower for the private banks led by IndusInd Bank. And despite such a big, massive negative update that we got, the Nifty is managing to shut shop higher, largely on the back of real estate that pulled up almost 3.7% towards the end of the session. Oil and gas, mid caps, even some of the pockets within financial services, consumer durables and infra spaces. The top movers on the Nifty, like I mentioned, have been Trent, BPCL, Sun Pharma, ICICI Bank, Shriram Finance and BEL. On the lower end, IndusInd Bank, of course, 655, over 27% kind of a cut. Shut shop at that point. Infosys 2% lower. Bajaj Finserv, M&M, Power Grid and HUL were the other top losers as far as the Nifty is concerned. 61 points higher is what we have shut shop at the high point, and the markets continued to inch higher even in the last fractions of seconds of the markets shutting down. 22,521. No complaints with the kind of the day that has spanned out as far as the midweek trade is concerned. Remember, we have 2 more sessions to go, and then Friday will be a holiday on account of Holi. But let's hope that the festive cheer can continue to spread across the D Street. We'll be back with market coverage tomorrow morning. Stay tuned with us on Business Today, even beyond the stock market hours, to look at what's really buzzing in the world of business and economics.
It's obvious, Elon Musk is rubbing a lot of people the wrong way. The man put in charge of cutting